All right, everyone. Good morning, good afternoon. Thank you for joining me. It's nice to see so many people here in this early hour. What I wanted to do today, as you know, this is the last day of the year, and the market is moving slowly. A lot of people took the time between Christmas to the New Year's for vacation, for relaxing time. So I thought if we're not having the live trade room as usual, why not make a kind of end of the year breakdown? I want to check some of the majors, starting from the monthly chart, weekly charts, see what we had going on in 2018 and what to expect coming into the new year. So I hope it will give you also some ideas of the year and hopefully some new ways that you can check out the market and learn from it. So let's start from the Euro USD. Taking a look at the monthly chart, we're gonna delete all the drawings and start from scratch. So if we're going all the way back, right, to 2008, we have here the high of the euro at around 150. Since then, all right, it's more than 10 years, we can clearly see that the trend is a downtrend, right? As price going down, to create lower lows and lower highs. All right, this has not changed for 10 years. Okay, we can even take this monthly trend line from the highs, all of that. So we can clearly see that for the past 10 years, we've been going down on euro. Let's zoom in to what we had this year. So price since late 2016 corrected to the upside to visit our trend line again, and since then dropped down. As you can see, this area here is a key area for us in the euro, because you can say that this is the 50 range. Let's say that this line is 0, okay? This is the lowest part, this is almost 1-to-1. And let's say that this part here is 100, okay? It's the latest high. So at the moment, we are exactly at the middle point. So possible scenarios for the first quarter of the new year. If we see a continuation high, we have this range to fill here in the monthly. Approximately approximately 8% higher, okay, or 1,000 pips higher. To the downside, around the same area. But the important thing to say when looking at the euro for the next year, let's move into the weekly. So we define this area. This here will determine our bias for the first quarter of the year, or at least it will determine my bias. Obviously, everyone has their own opinion. So we can see from the weekly chart that, remember our 0 level, our ultimate low, market has pushed very high to our 100 line, upper resistance, and came back to retest this area for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. So 12 weeks that price has been fluctuating here, and although it's still correcting, keeping the downtrend, it can push higher towards this 200 moving average. Unless, of course, we're breaking below this level, then it will be short bias for the first quarter. So hope you have this area marked down. Remember that especially in currency pairs, in stocks also, but especially in currency pairs, it's not a price per se, it's a price zone, right? It's not just one price, it's a range of prices. Okay, you can see even on the daily chart how this area is holding, and now price is consolidating. Let me know your thoughts on the euro coming into 2019. Another interesting thing for the euro, if we're taking a look on this area here, this is the area that price has been fluctuating in between 2015 to 2017. So for 2 years, we were in this box here. We broke outside this box on May 2017. And look at that, we're now retesting the broken box, right? Makes sense? So if this box holds, we're going higher. If we're going back into this range of the box, we're going to fill the bottom of the range. All right, so this is for Euro USD. Definitely interesting. Let's move on. You can give me a pair that you want me to analyze. I have a few more that I want to do, but let me see if you have something interesting. Hey, yeah, GBP USD is on my watch list as well. Philip will take a look on oil also. Okay. So mark down our levels for Euro USD. This webinar, this session will be recorded, so you can also watch it later if you're interested. Let's take a look on GBP USD, same process that we did before. We're removing all the drawing tools and taking a look on the monthly. So a very similar story to what we saw in the euro, right? Since early 2000s, price has been dropping down. Obviously, Brexit made things worse for the pound, worse than the euro. So let's do the same thing, that we did on the euro. We'll take a zero level from the monthly, 1.22. This is a very strong level, monthly level for the GBP USD, right? Obviously 1.40. Prices supported 1, supported 2, and every time this area creates something interesting in the market. Okay, this is our monthly resistance. Let's jump into the weekly and we can fix our levels. Okay, not as clear as the picture that we see in the euro. Since hitting our zero level, we came all the way back up. This is exhaustion, right? Remember that the market doesn't move in a single line. Always we have a move, then we have an exhaustion period, right? When the market can't keep anymore. So after correcting all the way, we kept on falling. It looks obviously more bearish than bullish in my eyes coming into the first quarter of the next year. But not an actual setup here right now. This is our level to watch for the upcoming days and weeks, 1.2630. The level that we broke below had a very hard time here, very strong seller's pressure, but eventually momentum, especially when we're looking at the market today, pound is strong today. But short time, we're going higher for next year. It's too soon to tell. Most likely, in my eyes, remember that it's not a trading advice or anything. It's just the way that I see the market, and Everybody sees different things, and there's many ways to make money in the market. Me personally, I usually day trade, right? So I don't even look to trade those time frames, but it's interesting to take a general bias for the pair. This is what I did in the end of last year, and it worked nice for me. So we can see a continuation down, maybe 500, 600 pips lower towards 1.2160. Strong monthly support and possibly a pullback from here. Let's take a look on gold. Gold on the monthly. Let's start, you know what, on gold, let's do it the other way around. Let's start from the daily. So gold, obviously, with all the sell-off that we're seeing in the stock market, in the US stock market, gold is, as you know, is a classic safe haven. A lot of the times when there's uncertainty in the market, traders go to gold. So indeed, if we're looking on gold, let's say since the beginning of October, we got a very nice push higher, currently trading at 1,282, which is the highest level for gold almost for the year. No, sorry, we were in the beginning of January, we were higher than that. But as long as the pressure on the US stock market continues, and for the moment it looks as it continues, still no signs of a reversal there, gold can continue to go higher. Let's take a look on the monthly. This obviously is the crash of 2008. Remember that 2008, the subprime crisis, biggest crash in history of the stock market. During this crash, gold went insanely to the upside. Since then, look at that. Although the market has went up for those 10 years, gold has just corrected to the downside. Looking at the monthly, we can now see that we are respecting this monthly trend line, and we are getting close to our monthly resistance between 350 to 370. So if this slowdown, this economical slowdown continues throughout the first quarter of the year, which from the signs right now, it looks like it will, who knows, right? But it looks like it will. Sorry, we can expect gold to continue and go higher for maybe even 5% more or 50 points, sorry, higher. On the weekly also, you can see how nice this weekly trend line is holding. Yeah, and price action for the moment is bullish. Let's take a look also on oil. Oil, unlike gold, usually when the stock market is going down, oil is going down with it. It's like the chicken and the egg. You don't know who came first, but you can definitely see this is a daily look on the oil. Remember that since October, stock market is going down, so is oil dropping almost 45% within a few months. So definitely huge sell-off on oil to the end of the year. Looking at the monthly chart, it's very obvious what is our key monthly zone. Between 30 to 34, let's say between 32 to 35. So remember, this is the last day of the month. Most likely this monthly candle is going to close somewhere in this area. So we can possibly see a continuation down to this support zone. Keep in mind, this is a monthly chart, right? It can take a few months. Let's take a look at weekly, on the oil on the weekly. You can see that we've broken. We had this correction period. We broke below. Yeah, direction is bearish. If you're looking for For positions, obviously there's no trade right now. Who knows at this moment if it will go higher first before going down? But you can take this weekly fib from this all region, right, and wait for those areas. To make it accurate, at the bottom of the zone, right, you see how beautiful it respected our 50 level. This just gives us another indication that our level that we marked here, our support zone, is a strong one. So possibly another correction higher on oil, back to the 50 level or back to the 61 level, and then possibly another leg to the downside. All right, guys, hope it helps. Hope it helped you to get some ideas, to see how I watch the market. I'm really excited for next year. 2018 has been really good, really good. After years of struggling in the market, I finally feel like I found something, and it's not something technical in the market, it's more something in myself. And this is what I will try and keep on doing for 2019. So thank you for being with me. If you have any questions, I write down in the chat room. You can always email me here, .com, yeah, or you can send me a text, a WhatsApp, a Telegram in this number. Sure, guys, thank you. Thank you for being here. We'll be in touch. See you soon. Take care. Bye-bye.